Hi, David.
Hi,
Thank you so
Anna.
much for joining me today. So I'm here with David Luo with National Bank. You're a premium banker. Can you tell our viewers what is a HELOC?
Yeah, good question. HELOC, the full name of the HELOC means Home Equity Line of Credit. So easy enough to be understand is, so home, which is the property that customer own, and equity means the equity, the value of the property of the home, and then line of credit is this is a secure and against the customer owned property based on the equity.
Now, is the equity that I just want to clarify, is that literally just the value of the house, or is it the value that you have paid off is the difference between what you owe the bank and what is yours?
So
like, what do you mean by equity?
equity means the value of the house,
The
of the
total
property,
value.
yeah, of
Okay.
the value, yeah, of the
Okay.
property itself.
Okay.
Yeah.
And so a home equity line of credit is different from a mortgage. How?
So pretty much under the big umbrella of the property, so we can one straightforward mortgage tiers, and then that's more like we can name it as a loan, and HELOC because it's a line of credit. So even though under the same property, and this is under the structure other than the mortgage under the same umbrella.
Okay.
And the benefit of home equity line of credit is the customer can use it as a bigger amount of MasterCard with lowest interest rate because it's against with their property.
Okay.
Yeah.
So whereas a mortgage is a sort of a very structured payment structure, you get sort of a lump sum up front and you don't really have access to borrowing more money unless you restructure the mortgage, whereas a home equity line of credit, you can put money in, you can take it out. Is that how it works?
Yes, that you can. The customer can understand in general in that way, and then actually like home equity line of credit or HELOC, in some situation can be converted into a mortgage structure.
Okay.
Under the same property.
Under the same
So
property. Okay.
yeah, so HELOC is just like being more flexible.
Right.
And then the customer, like what you said, put the money in, take the money out,
Right.
and the interest is calculated daily.
Okay.
And then let's say if I use it today, if I put it back, so the interest only per day interest.
Okay.
Unlike the mortgage, it's a straightforward, it's a fixed installment
Okay.
within that specific terms.
Okay. So a home equity line of credit offers you more flexibility, but does it cost more? And does that flexibility come with a price tag, like a higher interest rate?
Good question. I did love the question. And then so compare, let's say there's two comparison. If we compare with HELOC and mortgage,
Yes.
to be very honest with you, mortgage interest rate will be a little bit lower than the
lower.
HELOC.
Yeah.
But when we compare with the same type of like line of credit in same inside, HELOC's interest rate is significantly lower than the unsecured line of credit.
Okay.
Yeah.
So since we're talking about different types of credit, you have a HELOC and an unsecured line of credit.
Yes.
What is the difference? And what are the values that you can generally borrow? Are they less or more?
I would say for most of the MBF referral client or MBC client, sometimes most of them they have both. The reason being is an unsecured line of credit. There's no any securities registered under bank. So that is totally based on the customer's credit score,
Yes.
income stream, and they're holding with the bank.
Okay.
So they don't need to put anything as a security
Right.
with the bank. So they approve either 20 grand or 25 grand with a reasonable amount, but it cannot be, of course, go above 50 grand, that kind of thing.
Okay.
So a smaller amount is like we call personal flexi line.
Okay.
You can think about as a bigger amount of overdraft protection.
Okay.
But HELOC, the thing is equity behind it because we secure property of the client's
the
home,
house,
right? By
yeah.
the house. So the amount can be significant, like bigger or higher than the unsecured one.
Okay.
And then, of course, the application will be a little bit more complicated. And then when we proceed for the clients.
Okay. Great. Well, thanks so much, David. It was great to have you here today. I appreciate it.
Thank you for having me, Anna.